lifting their dividends. Is now a good time to buy those stocks? Let's get some ideas from Grant White, portfolio manager at Endeavour Wealth Management. Grant, great to see you as ever. Thanks very much.
Yeah, always my pleasure, Andy. Good to see you.
Start off with BMO. Your basic verdict on that stock is a hold, but you're tilting towards buying it.
Yeah, so actually, I think after this report, we're in buy mode right now. Actually, to be quite honest, and so what we really liked out of this report is that things got a little bit cleaner on the BMO side. We've liked BMO for a long time. We've been buying into it, frankly, over the last few years, and so it's been a great core holding for us. But I think that things are clearing up a little bit. We love that the loan loss provisions are cleaning up a little bit, especially on the United States side of things, which is a big part of the business. We love seeing our Canadian banks with a little bit of diversity in the revenue streams. And so BMO is, I think, very well positioned right now. The report was nice from a beat perspective, but where the revenue is coming from is also really important to us. And we're seeing a lot of diversity there, especially compared to the other Canadian banks. And so from all those reasons, we decided to switch actually just this morning into a buy on BMO. Now, the other thing I really like on it is pricing, to be quite fair. And I think we're getting a good price. We're getting good value right now with BMO, and especially compared to their peers. So good pricing combined with diverse revenue streams is a good thing right now for BMO.
TD Bank, this is a hold, but perhaps a buy for speculators or investors with more of a speculation bent.
Yeah, I would say TD, we still actually are maintaining our same position. So we're in a hold. The reason why we put a bit of a speculative buy on it is because, we know TD is a good company and we believe that they will figure things out. We're not buying it right now today, but we are holding it. This was a good report. I mean, this is not to take away from a good report. I think TD is doing quite well on a number of areas. I mean, especially, following the fallout, if you will, of a couple of years ago in the United States. I think they're navigating that really well. I think they're earning back the trust. I think that the revenue streams are diverse there. I would love to see a little bit more out of the other revenue streams aside from the net interest income. So if we can see a little bit more out of the wealth management business, we can see a little bit more out of insurance, then I think we're going to be into buy mode. But for right now, we still have it as a hold. But it's a good report. Everybody should be very happy as a TD shareholder today.
Okay, and then finally, CIBC, and CIBC, what's your verdict there? That stock near record highs.
Yeah, CIBC is really interesting because, we have it again as a hold, but more of a speculative buy if you're interested in taking a bit of a leap on it. I think that, CIBC, again, another fantastic report. They're doing a lot of the right things, but I do think that there's better options out there in the Canadian banks, with BMO being one of them. And so, primarily for that reason, we're not buying into CIBC. As I said earlier, I love a Canadian bank with diversified revenue stream, and I'd love to see CIBC do more of that going forward. They've done great on capital markets. I mean, that can't be taken away from them. Really good job. But I'd love to see more out of diversity, whether that's from a geographic perspective or from their other revenue streams like wealth management and you name it. And so for all those reasons, I think CIBC remains a somewhat speculative buy. I mean, this isn't a high risk speculation here. It's a Canadian bank at the end of the day, but it's a speculative buy as compared to its peers in my mind. And it's just because of that. I mean, I think there's a little bit more risk on the table. I don't love the exposure to debt lending and housing. I don't love that. And I think there are some ripples that could come out there. But overall, really great report. We're going to keep it as a hold for now. But if you want to take a bit of a flyer on a Canadian bank, CIBC might be the one you take a bit of a flyer on.
I'm sorry, did you say residential exposure, mortgage exposure at CIBC?
Yeah, that's a little bit more of the concerns that I see today. And it's just more because they're so tied domestically here in Canada that I see a little bit more risk there as compared to some of their peers. And especially, again, when I'm comparing it to a BMO, I'm just seeing a higher quality offering at BMO right now that it's a lot easier for us to buy into it. And especially if you're basing it on pure pricing, CIBC looks great. But I think that we're doing pretty well with BMO on pricing, and we're getting a much better quality, if you will, out of BMO in terms of just a holding. And so from the fundamental side, I love BMO. But that saying, if you're just looking at pure pricing and you think that CIBC is going to do quite well, especially in the areas they've already done well in the capital markets, if you're not worried about residential debt structuring in Canada, then you might do quite well with with CIBC as well.
What about Royal? It's almost like a knee-jerk choice, I think, among portfolio managers. Would you be a buyer of Royal?
Yeah, we still like Royal. We've been, we're not actively buying Royal today, to be quite honest, but we've held it for a long, long time. We'd be putting more money into BMO today than we are into Royal, but the Royal is absolutely quality. And I'd put them in the same breath as where we have BMO. Diverse revenue stream is really important to us. They've done really well on that front, and they've done that well for a long, long time. It's more of a pricing opportunity in my mind. And so I think that we're getting better pricing out of BMO. If we got better pricing out of Royal down the road, then we might look to switch that. But as of right now, Royal and BMO are both of the highest quality in my mind, and so I think you'll do just fine there. I just be very careful in the pricing. As we know, we've seen a huge run up in bank shares this year, which is great. But you got to be careful on pricing going forward. That's my only comment on that. But overall, Royal is a fantastic company as well. Just be careful on pricing.
Oh, Grant, thank you very much. It's always great to hear from you.
Yeah, my pleasure, Andy. Take care.
Grant White, portfolio manager at Endeavour Wealth Management.